Here we go. Let me just make sure this is all good. There we go. Perfect. Here we go. Boom. Hello everyone. Welcome to day 7 of the bootcamp. I'm just going to wait for everyone to get in here and then we're going to go over this one. So this is on just basic support and resistance. I'm definitely sure you'll pick something up, especially if this is your first time hearing about support and resistance. Late for you. Yeah, it definitely is. I wanted to get the other live out earlier and then this live. Let me know what you think of the format in terms of the one live a day, which is like this, very structured lecture style live on a specific concept. For example, tonight, support and resistance. And then one live, which is more chill. I have to mark up my charts anyway. Might as well go live and have a catch up with you guys while I'm doing it. I think those two lives, like one on a specific concept, very educational lecture style, and one very chill. So if you've got a really good knowledge and you don't need to know more about that specific concept, then just join and chill on the next live. Whereas if you're trying to build up that knowledge, then joining both is probably a good idea. Do you think it's a good mix? Do you think it's a good, all good? Yeah, bread and butter. This is bread and butter. So let's get into it. So on day 7 of the bootcamp, we're going to be going over support and resistance. If you do have any questions throughout, please just let me know in the chat. And if you're watching this video at a later point, just drop them in the comments below and let's get straight into it. So first off, welcome team. Let's get started. So welcome to support and resistance, the market's hidden battleground where buyers and sellers fight for control. It's not strategy, signals, or luck. Okay, support is like a floor where price keeps bouncing from because buyers show up to defend it. Again, you're going to hear me quote a lot of battleground quotes in this section, but it really is true. We can see here in this example, that blue line, keep in mind that this will come up later. That green box, is an area. It's not a line. This is something which is really important. When talking about support and resistance, whenever I talk about it, I'm always talking about an area, never a specific line. The market's too volatile and crazy for a specific deadline. It's normally an area. And we can see here, when we came into that area, buyers were defending that position. There was a lot of orders there being filled. So it'd come down, there'd be a lot of orders, we won't be able to break through, and then we continue up, and then we come down again. There's a lot of orders, and then we continue up. Let me know if that first concept makes sense. So again, we've got this green area here. When we come down, there's a lot of buy orders there, okay? So price can't get through because there's so many buyers, okay? And so it pushes the price back up. Then when we come down, it pushes the price back up. Here's an analogy that I like to use when discussing support and resistance. Imagine that green box at the bottom is food. And then at the top of the area is a village, okay? When we come down, the villagers, okay, they eat a lot of food. Let's say there's 10,000 pies at that green area. They come down, they eat like 2,000 of the pies. What happens? They go home. They go back up. Then they come down. They maybe eat, 2,000 more pies. Then they go back home. And then they come back down. If all of the pies were gone and they ate all of the 10,000 pies, that's when we would drop through that level. But if we continue to not break through and not finish off all the pies, then we'll just keep bouncing from that level. Let me know if that makes sense. I like putting it in terms of things which make it more relatable. But let me know, and then we'll continue. 10,000 Greg steak bakes. Yeah, whatever you want to use. Pies, steak bakes. Tell you what, when I'm back in the UK, I'm going to absolutely demolish little Greg's steak bake. Moving on. Resistance is a ceiling where sellers push price back down like bouncers blocking the nightclub entrance. Now, a lot of you familiar with Pop World in here. So, you know, imagine you turn up to Pop World, okay? You're too drunk to get in. They push you away. This is literally that. Okay, where's WizKid at? Okay, WizKid is getting flashbacks right now. But it's the exact same thing. We go up to the red area, okay? Let's say, again, there's 10,000 pucker pies or whatever you want to use. The village goes up to that area. They eat 2,000 of the pies. They can't break through. They're full. They go back down to the village. Then they come back up. Maybe they eat 3,000 pies. And then they come down. Notice something extremely important. I'm going to get out of here just so you can see this. This area here. So they come up. They eat 2,000 pies. They go down. They come up, they eat another 2,000 pies. We've got 10,000 pies at that level. So now there's 6,000 pies left at the level. Then we come back up and we demolish the level, okay? We take 5,000 of the pies out. So now there's just 1,000 pies left. So when we come back up to that level for the last time, we finish off the 1,000 pies. The village is still hungry. What do? They run to the next area where there's food. Okay, let me know if that makes sense. I hope that allows you to visualize what support and resistance actually is and the reasoning behind those moves. It all comes down to orders. Oh God, Ben's getting hyped over Pop World. Let me know if that makes sense. Sometimes the analogies go a bit overboard, but I want to make it as relatable as possible and as easy for you to visualize it as possible. So let me know if that makes sense. Again, there's food up here, there's a village down here. The village goes up, they eat some food, okay? If there's more than enough food, they'll just go back home. They'll sleep the night off. When they come back up to the village, they'll eat food again. If there's more than enough, they'll go back to the village. If they come to eat food and there's no more food there, there's no more orders there, there's no more liquidity there, they'll run to the next area of food. They'll run to the next area. I hope that allows you to visualize what is actually going on the chart a bit more clearly. Now they're looking for yum-yums. Okay, let's continue. So these levels don't work because we draw lines. They work because real money reacts there. Don't think of lines as exact prices. Think of zones, like messy chalk marks on a boxing ring floor. You can see here, you know, they're areas. They're not exact levels, okay? Price reacts at these zones because traders remember them. Markets have memory, and then one of the most important things. And when we come to a level, we rarely clear all of the orders, leaving over leftover orders. Meaning when we return, there's still orders to soak up that move the price. So we come down to an area, we bounce off it. For example, let's go back to this previous. We come back to a level, we bounce off it. Then there's still leftover buy orders at that level. So when we come back to it, those leftover buy orders make us bounce up again. Let me know if that makes sense, and then we'll sort of continue onto the next point. Let me know in the chat, and let me know in the comments if you're watching this at a later point. Does that make sense? These are key cornerstones of trading. You need to understand basic support and resistance. That's what everyone uses. Everyone in trading really has a level, an area of interest, whatever they want to call it, okay, where they're looking to enter the trade. Yep. Hungry now. Honestly, same. Yeah. Love that, Katie. Yeah. Okay, sounds good. So, retail traders draw lines. Institutional traders build positions. So where you see Cedar speaks a lot about building a position. Yeah, those who are in his section will be very familiar. Institutions don't care about tiny wicks. They build positions where the crowd gets trapped. The market doesn't punish mistakes. It punishes stubbornness. Just thought I'd throw in a few quotes from my favorite trading book, which is The Best Loser Wins. I think it's It's got some amazing, amazing things. And I thought another way we can improve the bootcamp is dropping in a few quotes. I think a good quote can really shape your trading and allow you to see the markets in a new light. I like a nice quote here and there. Ben, Ben's referencing something which just came up. CDARG is a beast. Strong levels are created where huge orders were previously stacked like giant sandbags. The more times a level holds, the more people believe in it, and belief creates behaviour. But every test eats liquidity, like termites, slowly weakening a wooden beam until they break. I get asked a lot, Max, if a level gets hit a lot, okay, does that mean it's getting stronger or weaker? So in the eyes of retail traders, it's getting stronger because surely if a level gets hit more and reacted off more, then it's proven to be stronger. But in reality, the orders at that level are just being soaked up. And when we run out of orders, like the analogy earlier, when we run out of food, we're just going to run straight through it. When support finally breaks, it often becomes new resistance, like a broken floor turning into a ceiling. We can see this perfect example here. I use these all of the time as well. Whenever something like this lines up with a golden pocket or high volume node or value area high, confluence, we'll get into that in a second. I'm like super happy. So we can see on the left hand side, this was previous resistance. When we broke through, we flipped it into support, and this carried on going up like all of the way. So resistance can be flipped into support. It's just like smashing through the ceiling and then finding support on that ceiling. Like that ceiling becomes your new floor. Okay, if that makes sense. You know, like Mario, how he like jumps through those things from the bottom and then he can like stand on top of them. That's basically what it is. Some crazy analogies coming out tonight, so I hope it makes sense. The shift happens because trap traders need to escape, creating new sell pressure at the old support. Round numbers act as magnets because humans love neatness, even though price doesn't. Institutions use these levels like hunting grounds because they know where retail enters and where they panic. Some traders buy the bounce at support, like catching a falling ball right above the floor. I'm going to pause right there. Let me know if you've got any questions. Need midnight munchies now. Okay, seems like we're all good. Others trade the breakout, like jumping on board a train that has already smashed through the station wall. I don't really like breakout trading. I think it's very risky. I like to get in at areas where I see a lot of confluence, a lot of support, or a lot of resistance. Breakout trading is a nasty business a lot of the time. The best traders don't guess. They wait for proof that buyers or sellers have actually shown up. False breaks are like fake doors in cartoons. You run through them and smash into a wall behind. I don't want to get caught up in fake breakouts. Breakout trading, again, risky business. Liquidity hunts happen because big traders trigger your stops to get better entry prices, not to be evil. Never put your stops where everyone else is putting theirs. That's where the sharks feed. So there's a lot of liquidity at those levels. It's called external liquidity. So everyone nowadays talks about liquidity and it's the best thing since sliced bread. I think it's vastly overhyped and also not explained correctly as well. A lot of people say liquidity rests above highs and lows. It does. That's called external liquidity. The majority of liquidity is actually internal liquidity, actually inside the range. If we pull a volume profile, something which I use very heavily, we can clearly see the bulk of the volume happens in the value area, in the middle, not at the upper extremities. So when people say, okay, the liquidity rests above and below highs, well, yeah, there is liquidity there, but there's also liquidity throughout the market everywhere. So, you know, you need to be more specific. So that's something to keep in mind. I constantly see people on about how great liquidity is, but you need to keep that in mind. Volume confirms strength, like a crowd cheering loudly for the winning side of a fight. When we're breaking out from somewhere, if there's a lot of volume, if candles are moving quick, if they're strong candles, if we can see VWAP spiking up, volume spiking up, that's basically a crowd cheering on that candle, and that candle's going to push through further. Okay, we'll do then. A big rejection candle with high volume is the market shouting enough. Now, we've all seen these candles before. You come down to a level and then suddenly you just get this huge candle. That's the market saying, whoa, you're stopping right there. We're going in a different direction now, okay? And they're very, very good areas to look to get into a position at that area of support, because the market has clearly told you it does not like price down there and will eat up all of the orders at that level, creating these huge rejection candles. By the way, guys, we're going to have a quiz at the end and then have a Q&A section where I'm going to pull up the chart and I'll show you areas of support and of resistance, just basic areas of support and resistance, so you can easily visualize these concepts on your chart. So if you do have any questions throughout, please hold on to them and we'll happily go over them at the end. Multiple reasons to enter at a level is called confluence, something that you'll hear off me a ton. Like several locks protecting a vault. Confluence is simply, let's say you've got one door, okay? If you run into that one door, you'll probably get through it. I trust you can make it through the other side. Whereas if I stack multiple doors, it's going to be a lot harder to get through. That's what confluence is. It's stacking multiple things together to make it very difficult for price to actually pierce that level. Let me know if that makes sense, guys, and then we'll continue. Does that make sense? Everything all good? Have some more. Have a quick drink. Yep. Perfect. Okay, let's continue. So, support and resistance creates natural profit targets. So price rarely moves in straight lines, only steps from support to resistance, from support to resistance, from resistance to support. That's all market's doing. Wide spaces between levels suggest a range. Tight spaces suggest trending pressure, building like a coiled spring. So wide spaces, we're ranging in between. Tight spaces, chances are we're going up like this. That's not too important though. The best trades feel uncomfortable because they require patience. Patience is uncomfortable. Humans want to move now, okay? Another great quote from The Best Loser Wins, a trading book, which I heavily recommend. A lot of members of the group have hopped on that, so that's a great, some more great quotes. So, key takeaways, very important. Only mark levels with multiple strong reactions. Ignore every tiny wiggle and bump. We don't care about the little ones, okay? If you're unsure, just remove it. I do get quite a lot of members who message me and they're like, okay, I'm really confident on this one, but this one I'm not sure. Just take it off. We only focus on high probability. We don't need loads of trades. A few high probability trades a month can literally retire you and your entire family. Think in zones, not precise prices. Draw areas where battles happen, not razor-thin lines. Very important also. Always check volume when price hits a level. It tells you who's actually fighting. So I like to look at momentum, money flow, VWAP, and these other oscillators. When you're starting out, you can avoid this to begin with, but as you become more advanced, looking for confirmations to tell you, okay, I've got this level, I think it's going to be respected, but what's actually happening? Like, is this level actually going to be respected? That's where your confirmations come in. Never buy or sell blindly at a level. Wait for a reaction that proves someone is defending it. We want to see a reaction off a level. They're very important. Place stops beyond obvious zones, not right under support or above resistance where traps occur. If you place your stop at the most obvious place imaginable, you'll probably get caught out by a lot of wicks. It happens to everyone. Use confluence. Higher time frame levels plus round numbers plus strong reactions equals high probability. You'll notice a lot. When I'm marking up charts, I'll often look at what the number is, and let's say it's gold and it's 4,200. I'll like say out loud, okay, this is a psychological level. What do I mean by psychological level? It's a round number. Like if we look on gold, round numbers, they tend to act as support and resistance, okay? Plan your target at the next structure level instead of chasing random fixed R multiples. A lot of people say to me, Max, where are you going to put your take profit? What risk to reward are you using? I don't use a set 1 to 2, 1 to 3, 1 to 4 risk to reward. I don't have a set take profit. I enter an area of support. I let the trade ride. I take partials as we're going up and I hold the position open, even add to winning positions. Something which I like to do as well is if I see an area of support is respected, I'll add to the position. So let's say we come down, I'll enter at the level. Then if that level gets a nice reaction, then it's proved that my idea was correct. So I'll add to the position. If we break through and we continue to go down, then I can do one of two things. One, I can fill my remaining position while still risking the same amount, basically getting a better average entry, which is really good. Or I can just leave the trade and then it hits my stop loss, but because I only entered with half my position, I'm only risking half the amount. It's absolutely fine. So I think that's a really, really good thing. Not throwing in your full position straight away. Being calm, being patient with it. And then adding to winning positions, something you will not hear from anyone else in the trading space really. But if all losing traders really are adding to losing positions, then what are winning traders doing? Review your trades, track whether levels held, broke, or trapped you. This is one of the most important lessons in this by far. When you mark up levels, I don't care if you're going to the chart and you're just going, look, floor and ceiling, okay? Over time, if you see loads of your support levels get respected and loads of your support levels get just ran through, you'll build up the ability to know when your level's going to be respected and when it's not going to be respected. This is what makes a strategy truly profitable. Deciding when to use it and deciding when to not use it. That's the true golden ticket in trading, which no one else will tell you about. Your goal isn't to predict the market, but to react intelligently when key areas are tested. Okay, let's get into the quiz. Let me know if you're ready to get into the quiz and we'll get started. And then after the quiz, I'll open the floor. If you've got any questions regarding support and resistance, please let me know. If you're a complete beginner, if you're really advanced, if you're watching this video after, you can just leave a comment and I can write a reply, or you can drop me a message on Telegram. Again, there's no question too small. Ask questions. Ask. The most successful people I see are the people who just ask questions. Let me know if you're ready and we'll get straight into it. Yep. Perfect. Okay. What does support represent? A price floor, buyers defending, a magic line, a random bounce, a trend line. And let me know in the chat what you think it is. A. Support represents a price floor, buyers defend. 2, why do institutions care about certain levels? They look pretty. That's where liquidity is. Retail draws lines there. It's random. Is it A, B, C, or D? And also, let me know what you thought of this bootcamp section as well. Is it valuable? Is there something you want me to add? Something you want me to go over more? Something you want me to go over slower? Something you want me to add? I really want to make these bootcamps very, very good, as I really like the format of going live and focusing on one specific concept in trading and just breaking it down in this format. I really like this format. And then doing a live later on, which is just like more chill, marking up levels. I really like that format, so this is a format that I want to continue, so I want to make it as good as I possibly can do. So that's why every single one is improving. Okay, institutions care because that's where liquidity is. A big problem which institutions have, which retail traders really don't, which is quite important to think about. The biggest problem for institutions isn't how to make a profit. It's how to get their orders filled. Like, imagine you're an institution, you need to fill, like, just these unbelievably big positions. It's very difficult to actually fill your positions. You can't just log onto your broker and enter the trade. No, you've got to really come up with a plan to execute and to get into that position. Getting into the position and getting out of the position is actually, like, really difficult. So depending on the market as well. So yeah, why do repeated tests weaken levels? People get bored, liquidity gets used up, candles shrink, price repaints. Okay, nice, Krishina. Yeah, I thought that would be a good ad. B. B, 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 B. Exactly. Repeated tests weaken levels because liquidity gets soaked up. Okay? It's just like a Mackey's that's got like 1,000 Big Macs, okay? If you go to the store, okay, eventually those Big Macs are going to be dried up. And if all the Big Macs are dried up, what are you going to do? You're going to drive to the next McDonald's. You're going to go to the next area of resistance, the next area of support to start soaking up those orders as well. Start soaking up them Big Macs. Why do round numbers matter? They're magical. Everyone watches them. Algorithms hate decimals. They always reverse trends. Again, why do round numbers matter? Magical. Got that fairy touch. Everyone watches them. Algorithms hate decimals. They always reverse trends. KFC, lol. I tell you what, I could demolish a KFC snack wrap right about now. Oh, I'm gonna have the most unhealthy spree when I'm back in the UK. I'm telling you. Let me know in the Discord your like fast food order. I'm going on a mission. Round numbers matter because everyone watches them. Exactly. Psychological levels. What is role reversal? Buyers becoming sellers, support turning into resistance, candles changing colour, trend lines flipping. Let me know, what is role reversal? B, nice guys. Support turning into resistance. Really nice. What helps confirm a strong level? Volume, candle colour only, guessing, indicators. There's two it could be here. There's one answer which it's going to be, which is like very concrete, but there's two that you could probably get away with. Now that I look at it now. So yeah, A, but you could say D, indicators, because volume indicators, but yeah, so if you'd put D there, I understand. 7, what is confluence? Everyone should be getting this right. Too many indicators, multiple factors aligning, a reversal candle, a breakout. I want everyone getting this right, okay? I mention this on every single live, okay? Confluence. Too many indicators, multiple factors aligning, a reversal candle, a breakout. What is confluence? Think of the doors lining up. Okay, nice, nice, nice. Exactly. Multiple factors aligning. How can traders avoid false breakouts? Enter early. Use wider logical stops. Ignore volume. Trade more pairs. How can you avoid false breakouts? I'm seeing a lot of B's. Wider logical stops. So then you don't get basically wicked out. Why should stops not sit at obvious places? It's illegal. That's where liquidity hunts targets. Brokers dislike it. It reduces profit. Why should your stop not sit at an obvious level? B. There's been a lot of B's. That's liquidity hunts target. What's the best mindset when trading levels? Predict everything, react intelligently, chase every bounce, ignore structure. How many? I feel like... Wait, I'm not going to mention it. Okay, nice. Okay, I did do this when I was tired. I'll give you that. Okay, enjoy. Leave a comment with your thoughts, and then Q&A. Let me know any questions with candlesticks, and we'll run not candlesticks with support and resistance, and we'll run through them on the chart. Let me just let me get up the chart. Where is it? Boom, boom, boom. Here we go. Let me know any questions regarding support and resistance, and I'll happily go into them. It can be something super basic, something you want me to clear up, anything. And if you're watching this at a later point, please don't hesitate to leave a comment in the comment section or head to the YouTube description. You can join the Telegram on there. You can drop me a message personally, and I'll go over it. Even send you a personalized video or something like this. So to really nail that down. I like quizzes, it makes it more engaging. Nice, Christina. Yeah, I enjoy them as well. I quite like being a quiz master. You mentioned earlier that you don't exactly look at 1-to-1 and 1-to-2 are on a bounce. Yeah. What do you look for when it comes to setting a take profit? Shame, I don't set a take profit, really. I very rarely set any take profit. I did put this in the chat before. I'll show you, actually. So you can see that... So I'll get up an actual example from last week. So where is it? So I was looking for this blue line here. I don't know if you can see it. This blue line here. And I was looking for it because it was a buy level, golden pocket, etc., etc., etc. Okay, then we got a perfect bounce from it, which was really nice. And I put in the Discord, you can see this here, I'll put it after. I put TP/targets I don't set. TP are fairly meaningless to me as I don't have a flat level to close the full trade. I don't want to put a ceiling on my profit. It's like having a business, and once it's made a set amount of money, you just close it down. Job done. Made money, bye guys. Why not keep the business open a bit? Maybe sell off parts of the business, make it leaner, but still keep the main section open to try and squeeze as much profit out as possible. This is how I like to think of a trade. I think of trades like I think of running a business. I want to squeeze as much profit out of it as possible. Once it's made a certain amount of profit, I'm not just going to close the business. And then, what do you know? The trade, it absolutely went, parabolic beyond belief, which was, it was the right move to make. Saying this before, so what is your closing strategy, man? Maybe that's a better question. Yeah, Shame. So when I move into profit, I take profits. When in profit, I take profit. If we have a very good bounce, I'll take less of the position off the table. If we have a not so good bounce, I'll take more of the position off the table. Then I look to the left-hand side of my chart. So for example here, and I'll simply just go, okay, we've got an area of previous support there. Okay, I can see like previous support there. Okay, I can see this here. Okay, I can see like previous resistance here. Okay, we're probably going to go price exploration mode up here. Maybe I'll look to the left-hand side of my chart. And then I'll take profits here. I'll take profits here. I'll take profits here. I'll take profits here. And I'll just continue to take little bits of profit off the table. And then even, a lot of the times, I'll move stop at these levels. So once we hit this level, I'll move my stop under this low. Once we hit this level, I move my stop under this low. Once we hit this level, I move my stop under this low. Once we hit this level, I move my stop under this low, etc., etc. There was a member, which I remember telling this story before, but I think it was a very important story. He had the problem of, this is a really, really, really good story, actually. He had the problem of closing positions too early. So we'd get a bounce on a level. He was really good at marking up levels. Like, his levels were solid. But once he was in the trade, he would just like want to take profit straight away. And he was like on the cusp of, it was amazing. So we came up with this plan. I had a little call with him. And we came up with a plan. Okay, you're not allowed to take profit. And he looked at me first. He was like, what do you mean? I said, you're not taking profit. You are going to be a profitable 100% stop loss trader. And so we came up with a plan for him of only moving his stop loss. So in profit, a level would get a bounce. He'd move the stop loss under the low that's formed. Price would move up. He'd move the stop loss again. He'd move the stop loss again. He'd move the stop loss again. Look, a lot of positions were stopped out at break even. A lot of positions were stopped out in a bit of profit. But overall, it was like break even, slightly profitable. And then the few positions, the 3 positions over the course of the month that went parabolic, he made insane percentages on, to where it just skyrocketed his portfolio. It's similar to, like, if we think of venture capital, like 80-90% of businesses fail, but those 10% that go on to make a serious amount of money outweigh all of the losses. That's how basically we got him to think about it, and he went on to make thousands and thousands, and he's still doing extremely well. Now he's added more to it now, but that gave him that breakthrough in his mentality. Nice, Manji. Really, really nice. Is it I see profit, then I'll see it reverse and take that as a loss in my mind, as I didn't close it at the max level. Shame. No, there's no one catches the exact bottom. No one catches the exact top. It's impossible to time the market. It's just not. The only loss in trading is not sticking to your plan. So first off, have a plan, like a trade management plan before you enter the trade. This is what I personally do. I have a trade management plan before I enter the trade, and I just stick with it. Because any decision you make, until you're like extremely professional, any decision you make while the trade is open is a useless. It's a useless decision. You're seeing, like, if we just take a step back, if you're seeing your money go up and down every second, do you think you're in the mental, do you think you're in a good mental state to make calculated, professional, coordinated decisions, seeing money go up and down constantly? No, I know I am. Like, I'm not. If I see my position going crazy up and down all the time, like, I'm going to make different decisions than if I was to have highlighted a trade management plan beforehand. So for a long time in your trading, have a trade management plan, stick to it when in the trade, and understand that every single decision you make while that trade is open, you may think like it's a good decision. And look, a few of the trades where you make those decisions, they might perform really well. And you might naively take luck for skill. And that could reinforce those bad habits. But I think, especially beginners, understanding once you're in a trade and you're seeing your money go up and down, every decision you make until that position's closed is completely is useless, really. And you chances are going to make very bad decisions unless you've got very, very, very good emotional control. I do know a few members in the group who are just like, I genuinely wish I had their emotional control. Like, they are just so, I don't even know, they're stone cold. But, you know, I'm not like that. And so you got to play to your strengths and also accept your weaknesses. Point. Okay, I appreciate that, guys. Anyway, we'll finish up there then. If you do have any questions or anything comes up at a later point, if you're in the private group, just at me in the Discord and I'll happily answer. And if you're not, then just drop me a message. And I hope everyone has an amazing Monday. And I hope everyone enjoyed the video. And I'll see you tomorrow for day 8 of the bootcamp. I am live streaming every single lesson of the bootcamp. If you want to come see that, I live stream it at normally about 6:30 p.m. And then I'm live every night, Sunday to Thursday at 8 p.m. And yeah, so take care, everyone. Have a great night, and let's smash the week. See you in a bit, Krishina. See you in a bit, Shane. Chris, who else? Manji. And Manji, big shout out, mate. Really, really nice work on that level, mate. See you in a bit. Who else have we got in here? Katie, Tony, Chris, Drew, Steve, MGV, Nisi. Take care, guys. Let's have a great weekend.